we will explore 15 ways to maximize your returns and achieve financial success. From real estate investment trusts and fixed income investments to entrepreneurship and cryptocurrency, we have gathered the most lucrative and promising investment opportunities that you can explore to grow your wealth. So, let's dive in. Number 1. Real estate investment trusts. Diversify your portfolio. Investing in real estate is often seen as a safe and stable way to grow your wealth. However, not everyone has the time, expertise, or capital to invest directly in property. That's where real estate investment trusts come in. REITs allow investors to pool their money and invest in a professionally managed portfolio of income-producing real estate properties such as commercial buildings, apartment complexes, and shopping centers. One of the key benefits of investing in REITs is diversification. By investing in a portfolio of properties, you're spreading your risk across multiple assets and locations. REITs also provide a passive income stream, as they are required to distribute 90% of their taxable income as dividends to shareholders. Another advantage of REITs is that they are highly liquid. Unlike traditional real estate investments, which can take months or even years to sell, REITs can be bought and sold on the stock market just like any other publicly traded security. This means you can quickly and easily adjust your portfolio based on market conditions or your changing investment goals. However, like any investment, REITs do come with risks. Market volatility, interest rate fluctuations, and economic downturns can all impact the value of your investment. It's important to thoroughly research the REIT and its management team before investing and to consider the overall health of the real estate market. REITs can be an attractive option for investors looking to diversify their portfolio and generate passive income through real estate. As with any investment, it's important to do your due diligence and consult with a financial advisor before making any decisions. 2. Fixed income investments, bonds and CDS and maximize your returns. If you are looking for a low-risk investment option to maximize your returns, fixed income investments such as bonds and CDS can be a great choice. These investments offer a fixed rate of return over a predetermined period, which can be anywhere from a few months to several years. Bonds are essentially loans that you make to governments or corporations. You receive interest payments on the loan, and the principal is returned when the bond matures. CDS, on the other hand, are certificates of deposit that offer a fixed interest rate for a set period of time. One advantage of fixed income investments is their predictability. Since the returns are fixed, you know exactly what to expect and can plan accordingly. This can be especially helpful if you are looking for a stable income stream to support your lifestyle or retirement. Another benefit of fixed income investments is their relatively low risk. While there is always some degree of risk with any investment, fixed income investments are generally considered less risky than stocks or other types of investments. This makes them a great option for investors who want to minimize their risk exposure while still generating a decent return. If you are considering investing in bonds or CDS, it is important to do your research and choose a reputable institution or issuer. Look for investments with a solid credit rating and a proven track record of reliable returns. With the right approach, fixed income investments can be a valuable addition to your investment portfolio and help you grow your $1 million for maximum returns. 3. P2P Lending. High returns, low risk. Peer-to-peer lending platforms allow individuals to lend money directly to borrowers, cutting out the middlemen such as banks. This type of investment offers higher returns than traditional fixed income options such as bonds and CDS, while also diversifying your portfolio. One of the benefits of P2P lending is the ability to invest in small amounts, which reduces your risk exposure. You can also choose which loans to invest in based on the borrower's credit score, loan purpose, and other factors. While P2P lending can offer higher returns, it's important to be aware of the risks. Borrowers may default on their loans, and there is no guarantee that you will receive your principal and interest payments. It's important to do your research and choose a reputable P2P lending platform with a track record of successful loans. P2P lending can be a good way to diversify your portfolio and potentially earn higher returns on your investments. Just be sure to understand the risks and choose a platform that aligns with your investment goals and risk tolerance. 4. Rental property investment, passive income stream. Rental property investment is a popular way to grow your wealth and create a passive income stream. It involves buying a property and renting it out to tenants, generating rental income on a regular basis. This can be an excellent way to earn steady cash flow while also building equity in a property that could appreciate in value over time. When investing in rental property, it's important to choose the right location, property type, and price point to ensure that you're generating a positive cash flow. You should also factor in costs such as property management, repairs, and maintenance when determining your potential returns. One advantage of rental property investment is the ability to leverage other people's money through a mortgage. By putting down a smaller percentage of the property's value, you can control a larger asset and potentially earn a greater return on your investment. Rental property investment also comes with risks such as vacancies, non-paying tenants, and market fluctuations. It's important to thoroughly research the market and perform due diligence before making any investment decisions. Rental property investment can be an effective way to grow your 1 million for maximum returns. By carefully selecting properties and managing them effectively, you can earn steady cash flow and build long-term wealth through appreciation. Number 5. Alternative investments, art and collectibles. Alternative investments, such as art and collectibles, can be an exciting and lucrative way to grow your wealth. Investing in rare and valuable items like paintings, sculptures, coins, stamps, and other collectibles can provide diversification in your investment portfolio. One of the advantages of investing in art and collectibles is that they are not correlated to traditional asset classes like stocks and bonds. This means that they can offer a hedge against market volatility and potentially provide higher returns than other investments. Investing in art and collectibles requires specialized knowledge and expertise. It is essential to do thorough research and due diligence before making any investments in these assets. You should also consider storage, insurance, and other related costs associated with these types of investments. Moreover, the value of art and collectibles can be subjective, and prices can fluctuate widely based on factors such as rarity, condition, provenance, and market demand. Therefore, it is essential to be patient and take a long-term perspective when investing in these assets. Investing in art and collectibles can be a thrilling way to grow your wealth and add some diversity to your investment portfolio. However, it is crucial to approach these investments with caution and make informed decisions based on a thorough understanding of the market and the unique characteristics of each asset. 6. Entrepreneurship, be your own boss. Entrepreneurship is one of the most effective ways to grow your wealth, especially if you have an innovative idea that can solve a problem or meet a need in the market. Starting a business is a risky venture, but with the right strategy and execution, it can lead to significant financial rewards. To be a successful entrepreneur, you need to identify a profitable niche, create a strong business plan, and secure adequate funding. It's also essential to build a solid team and establish a brand that resonates with your target audience. One of the advantages of entrepreneurship is that it provides the potential for unlimited earnings. As a business owner, you have control over the products or services you offer, the prices you charge, and the marketing strategies you use. This flexibility allows you to maximize your returns while creating a positive impact on your customers and the wider community. Entrepreneurship is not for everyone. It requires hard work, dedication, and the ability to manage risks effectively. You may also face challenges such as competition, changing market conditions, and unforeseen obstacles that could derail your plans. If you have a passion for business and the drive to succeed, entrepreneurship can be a fulfilling and lucrative way to grow your wealth. With the right mindset and approach, you can turn your vision into a profitable reality. 7. Angel investing, support startups and earn profits. Angel investing can be a lucrative way to grow your wealth while also supporting promising startups. As an angel investor, you can provide financial backing and mentorship to early-stage companies, potentially earning significant returns if they succeed. One of the key benefits of angel investing is the potential for high returns on investment. While the success rate of startups is relatively low, those that do succeed can yield significant profits for their investors. In addition, angel investors can often negotiate favorable terms, such as equity ownership and board seats, which can further boost their returns. It's important to keep in mind that angel investing is also inherently risky. Many startups fail, and there's no guarantee that your investment will yield a positive return. It's also important to carefully research and vet the companies you're considering investing in, to ensure that they have a solid business plan and a strong chance of success. Angel investing can be a great way to diversify your portfolio and potentially earn significant returns, while also supporting promising entrepreneurs and innovative new businesses. 8. Cryptocurrency investment, digital assets for the future. Cryptocurrency investment is one of the hottest trends in the investment world today. It is a form of digital currency that uses encryption techniques to secure and verify transactions and control the creation of new units. Cryptocurrencies like Bitcoin, Ethereum, and Litecoin have seen a massive surge in value over the years and are considered by many as a store of value and a hedge against inflation. Investing in cryptocurrency can be a risky venture, but it can also provide potentially high returns. The key to successful crypto investing is to do your research and only invest what you can afford to lose. It is important to diversify your investments and not put all your eggs in one basket. There are several ways to invest in cryptocurrency, including buying and holding, trading, mining, and staking. Each method has its pros and cons, and it is important to choose one that aligns with your investment goals and risk tolerance. Investing in cryptocurrency requires a solid understanding of the technology behind it and the market trends. It is also important to stay up to date with the latest news and developments in the industry to make informed decisions. Cryptocurrency investment can be a high-risk, high-reward investment strategy. It is important to do your due diligence and consult with financial experts before making any investment decisions. 9. Emerging economies, high growth potential. Investing in emerging economies is a way to maximize your returns over the long term. Countries such as India, China, Brazil, and South Africa have seen tremendous growth in recent years and are poised for even more. These economies are characterized by a rapidly growing middle class, an expanding consumer market, and an increasing demand for goods and services. Investing in emerging markets can be done through mutual funds, exchange-traded funds, or individual stocks. However, investing in these markets does come with some risks, such as political instability, currency fluctuations, and lack of transparency in financial reporting. Therefore, it is essential to do thorough research before investing and work with an experienced financial advisor. One way to mitigate some of the risks associated with investing in emerging economies is to invest in diversified funds that invest in a range of different countries and sectors. This can help spread the risk and reduce the impact of any one particular investment. Investing in emerging economies can be an excellent way to maximize your returns over the long term. These economies are likely to continue to grow and expand, providing investors with attractive opportunities for investment. 10. Venture capital, invest in innovation. Venture capital can be an excellent way to grow your 1 million into even more significant returns. This investment strategy involves investing in early-stage, high-growth companies that have the potential to disrupt their respective industries. Venture capital firms typically invest in companies that are seeking funding to expand their businesses, develop new products or services, or enter new markets. In return for their investment, venture capitalists receive an ownership stake in the company, allowing them to benefit from the company's success in the future. While venture capital can be a high-risk investment, the potential for high returns is also significant. According to a study by Cambridge Associates, venture capital investments in the United States generated an average annual return of 25.6% from 1990 to 2019. Venture capital is not for everyone, as it requires a high level of expertise and research to identify promising companies. It's crucial to work with a reputable venture capital firm with a strong track record of successful investments. For those willing to take the risk, venture capital can provide an opportunity to grow their wealth exponentially over the long term. As with any investment, it's essential to do your due diligence and carefully consider the potential risks and rewards before making any investment decisions. 11. Index fund investing: simple, low cost, and effective. Investing in index funds is a popular and effective way to grow your wealth for maximum returns. An index fund is a type of mutual fund or exchange-traded fund that tracks a specific market index, such as the S&P 500 or the Nasdaq. The fund manager invests in a portfolio of securities that match the composition of the index it is tracking. Investing in index funds offers several advantages. Firstly, it provides diversification across a wide range of securities, reducing the risk of investing in a single company. Secondly, it is a low-cost investment strategy as index funds have lower management fees compared to actively managed funds. Finally, investing in index funds provides exposure to the entire market, allowing investors to benefit from market growth over time. To get started with index fund investing, you will need to open an account with a brokerage firm or a robo-advisor. Choose a fund that aligns with your investment goals and risk tolerance. You can also invest in index funds through your employer-sponsored retirement plan, such as a 401 or IRA. Remember to monitor your investments periodically and rebalance your portfolio as necessary. This ensures that your investments remain aligned with your financial goals and risk tolerance. Index fund investing is a straightforward and effective way to grow your wealth over the long term. By diversifying your investments, keeping fees low, and investing for the long term, you can achieve maximum returns on your 1 million. 12. Land investment: tangible asset with appreciation potential. Land investment is an attractive option for those seeking long-term appreciation potential. By purchasing land in an up-and-coming area, investors can see significant returns as the land increases in value. One key advantage of land investment is that it requires minimal upkeep and maintenance, making it a relatively passive investment option. However, it's important to conduct thorough research on the area and zoning laws to ensure that the land can be developed or used for the intended purpose. Another benefit of land investment is that it allows investors to diversify their portfolios beyond traditional stocks and bonds. It's a tangible asset that can provide a level of security against market volatility. One downside to land investment is that it can be illiquid, meaning that it may take time to sell the property and realize gains. Additionally, development costs can be high, so investors need to carefully consider the potential return on investment. Land investment can be a lucrative option for those looking to diversify their portfolio and invest in a tangible asset with long-term appreciation potential. However, it's important to conduct thorough research and due diligence before making any investment decisions. 13. Precious metals investment: hedge against inflation. Precious metals, such as gold and silver, have been used as a store of value for centuries. They have intrinsic value and tend to hold their value in times of economic uncertainty. Investing in precious metals can be a hedge against inflation and a way to diversify your portfolio. One way to invest in precious metals is by buying physical bullion, such as gold coins or bars. Another option is to invest in exchange-traded funds that hold precious metals. When investing in precious metals, it is important to understand the market and the factors that affect prices, such as supply and demand, inflation, and currency fluctuations. It is also important to consider the storage and insurance costs associated with holding physical bullion. While investing in precious metals can be a good way to diversify your portfolio, it is important to remember that it should only make up a small portion of your overall investments. As with any investment, there are risks involved, and it is important to do your research and consult with a financial advisor before making any investment decisions. 14. Franchise ownership, profitable business opportunities. Franchise ownership can be a lucrative way to grow your wealth. By investing in a franchise, you gain access to a proven business model with a successful track record. You'll have the backing of an established brand, ongoing support, and a network of fellow franchise owners. Franchise owners enjoy several benefits, including low startup costs, operational support, and marketing resources. Many franchises also offer comprehensive training programs to ensure that owners have the necessary skills and knowledge to run a successful business. When choosing a franchise to invest in, consider your interests, skills, and financial goals. Look for franchises that have a strong brand reputation, a proven track record, and a solid support system in place. You should also research the industry and market to ensure that there is demand for the products or services offered by the franchise. Franchises can be found in a wide range of industries, from food service and retail to healthcare and education. There are also franchises available at various price points, making it easier for entrepreneurs to enter the market. Franchise ownership can be a smart investment strategy for those looking to grow their wealth. With the right franchise, you can enjoy the benefits of entrepreneurship without the risk and uncertainty of starting a business from scratch. So if you're looking to diversify your investment portfolio and maximize your returns, consider investing in a franchise. It could be the key to unlocking long-term financial success. 15. Stock market investment, profit from the world's biggest companies. Investing your money is an excellent way to grow your wealth over time. However, choosing the right investment strategy can be a daunting task, especially if you're aiming to grow your $1 million. In this article, we've listed 15 ways to grow your $1 million for maximum returns. First, diversify your portfolio with real estate investment trusts, which allow you to invest in real estate without buying property directly. Secondly, consider fixed income investments like bonds and CDS, which are low-risk investments that provide consistent returns. P2P lending is another low-risk investment option that allows you to lend money to individuals or businesses and earn high returns. Investing in rental property is a popular way to create passive income streams, and alternative investments such as art and collectibles can provide excellent returns over time. Entrepreneurship and angel investing allow you to support startups and be your own boss while potentially earning high profits. Cryptocurrency investment is a digital asset that is gaining popularity and can provide high returns in the future. Investing in emerging economies like Brazil, India, and China can provide high growth potential for your portfolio. Venture capital is another investment option that allows you to invest in innovative startups and earn high profits. Index fund investing is a simple, low-cost, and effective way to invest in the stock market, while land investment and precious metals investment can provide tangible assets with appreciation potential. In conclusion, investing your $1 million in a diversified portfolio of real estate, fixed income, P2P lending, rental property, alternative investments, entrepreneurship, angel investing, cryptocurrency, emerging economies, venture capital, index funds, land, precious metals, franchise ownership, and the stock market can help you maximize returns and grow your wealth over time. Remember to do your research and consult with a financial advisor before making any investment decisions. Thank you for watching. Don't forget to like the video, and keep on rising.